Hi, this is Acme with the Bulletin Board Heroes here at Vox Markets for Wednesday, the 21st of September. Starting off with the Ftse 100, where we've been really dancing with the two-year uptrend line there. That's been the feature here, I suppose, on and off since June and obviously before that, but over the course of September, a lot of testing of this line. Below the 72.20 area on an end-of-day close basis, we have a risk of another dive towards 7,000, which was 1999 resistance, so you can see how well the market's been doing. Otherwise, I suppose brave traders would be looking to buy on any dips towards 7,200, hoping that we'll head up towards the top of the range, normally up to 7,500, 7,550, that April resistance line. RSI sort of got itself out of jail, so in the low 40s, but still not high enough to get up to neutral 50, which would give us more confidence that we are actually still heading higher. Looking at the 50 and 200-day moving averages, 200-day line still rising. I suppose they're both slightly rising at the moment, and that may be the technical explanation for the reason that we haven't actually fallen out of bed back down towards the 7,000 zone. We're much more comfortable with RSI 50 plus or an end-of-day close above the 50-day moving average, currently at 73.58. Moving on to Bitcoin, where we've also got a market which is on the edge. Here you can see that we're still in that support zone from a post-July support zone, which is around the 19,000 area. We'd like to break 22,000, which is the 50-day moving average in that November resistance line. But really, this is just a dead market in a consolidation near support, or in some cases just below near-term support. Break of the 19,000 area in a meaningful way, which hasn't happened so far, would then take us to the mid-teens, so maybe 15,000 in the middle of that November trend channel, but just not looking very good or very active at the moment. RSI, a bit like the Ftse, in a no man's land near the 40 level at the moment, so not much to glean from there apart from the risk of a fresh leg to the downside. If you look at where we are now with that recent bull trap through the 50-day line, that sort of makes it feel as though we're somewhere in the equivalent of late April and waiting for a new leg to the downside while we're below 22,000. Onto the stocks, and it's not a great collection either, as you might imagine, but Artemis, which I've been covering, I covered yesterday as well, that gapped up through the initial September resistance of 2.3 pence, and we've had a follow through there, so looking for a retest of 3.5 pence August resistance and the top of that broadening triangle from back in May, which I suppose I could just adjust a little bit there. So above 2.3, looking for 3.5 on Artemis at the moment. Onto a stock which I believe, I suppose it's a bit of a binary bet, but looking better, say by the day, but looking better at the moment. 50 and 200-day moving averages rising. We had a golden cross last month as well. We've got a bull flag, which looks like a mid-move consolidation. Just tested the floor of that range around 4.8. We've got the top of the range there at 6.2. Break of 6.2 could give us the top of the one-year trend one-year triangle rather, as high as the 8 or 9 pence level, maybe even as soon as the end of next month. So everything hinging here on holding above 4.8, which so far Ascent has done. On to Blencowe, where I know there's a lot of believers of the story here. Here we've got a situation where the shares gapped up at the beginning of the month. They've held the gap. They've broken a resistance line there from April, so looking rather more decent at the moment. We've also had bullish divergence there from June, August. And the view now is that we should at least get up to the 200-day moving average area at 4.1 pence. And bigger picture target maybe by end of October or November up to as high as 6.2 at the top of that broadening triangle there from the end of December. Certainly looking rather healthy or healthier above that April resistance line in the 50-day moving average, which is currently rising there at 3.4. So it does look as though there's been a change, a positive change there at Blencowe. Also looking good at the moment is Contango. Here we've had a little break of the August resistance at 7.8. Above that, we're looking for, and we have been looking for, as high as 12 pence. That could be seen as soon as the end of next month, especially given the way that looks as though we're heading into a golden cross there, with the 50 and 200-day moving averages set to rise or ready to cross over the next week or two. We can get that, then 12 pence by the end of next month seems rather more likely upside value while we hold above the 50-day moving average around 6.5, and we don't expect that to be tested. Moving along to Helium 1, where I've noticed there seems to be an interview around the place at the moment. Bear trap from below that December support there at 6.1 pence. Above that, looking to at least retest recent resistance around 8.25 pence. Best case scenario target now up to 12 pence at that top of that broadening triangle from the end of last year, maybe sometime in November if we're lucky. But I suppose the main thing here is to get back above the old December support at 6.2 pence, around 6.25, to negate that bear trap that we've had. Bouncing off that extended support line there in the RSI window as well gives us more confidence that at least the shares will go back to the 8 pence zone over the next week or two. On to Igas, one of the stars of the year to date. Here we've got the shares trying to establish a mid-move consolidation. It's all above the 50-day moving average at 65 pence, which is good. If we can hold above yesterday's low in the low 70s, or yesterday's lows in the low 70s, then we could at least retest the £1.10 area over the next 2 to 4 weeks. But early days yet on that. It looks as though the shares need to consolidate a bit more, maybe for a week or two at least, before any new leg to the upside can be sustained. On to Mosman, which I think I covered yesterday. Here we're making more progress, bouncing off the rising 50-day moving average at 0.06 and looking to head up towards the bottom of that gap from May around the 0.09 pence, which would be quite a result from current levels while we hold above 0.06. Otaq is next, and here you can see, if I can get the shares loaded, we bounced off this, which looks like a broadening triangle, got bullish divergence there. We're just breaking the 50-day moving average level around 8.25 and above that, looking to hit the top of that falling trend channel, or falling sort of widening triangle as well, around the 14 pence area, maybe by the end of next month. Upside valid at least while we hold above the 7 pence level, which was resistance on the way down, and we've got bullish divergence there to help the shares along in the RSI window. Moving on to Poolbeg, where we've had some news today. It looks as though it's sort of cautiously improving here. We've got a rising 50-day line, we've got support above that 50-day line at 4.7 pence, and above 4.7 looking for the 200-day moving average around 6.25, perhaps over the next 2 to 4 weeks. But waiting for the big break there on Poolbeg at the moment. Moving along to one of the other big movers of the year to date, Pantheon Resources. Here we've got a situation where we bounced off the 200-day moving average. You need to have an end-of-day close above the 50-day line around 117. If we can get that, then it could be £1.40 by the end of next month. But we want to see a lower low than the low we saw yesterday at 103 on an end-of-day close basis. Couple of stocks to go now. First is Thor, which seems to be improving. We've got the rising 50-day line, we've got an unfilled gap to the upside as well. Very good signal there. That's a 0.57, and above that, looking for at least 0.7 over the next couple of weeks. Big picture target maybe by the end of next month. Not much of a big picture, but up to 0.87 on that, helped by that rising support line in the RSI window. Finishing off with this kind of stock which I don't normally look at. So it's normally the penny stocks here, but Wandisco, too good to resist. Had the big breakout with that resistance line break back in December. December resistance line break back in July rather. And we've had the shares accelerating ever since. Could head up to 550, which is the top of that rising trend channel from October last year, while we hold above the £4 area. That's it for me today. More updates tomorrow.